Okay, awesome. All right, seems like everybody can hear me here. Well, thank you for joining the Landscaping Accountant webinar and to taking the time to join me on here. We're going to go over some key items in order to have a profitable company. So whether you're just starting your business or you've been in business for a few years now or a long time, there will be a lot of good information and good key takeaways. And just to let you know, you will be receiving a recording of this webinar to the email you used to sign up. And you can ask any questions in the chat section. I will be answering any questions there. But yeah, so my name is Carla, and I'm the founder of Cycle CPA. And we do bookkeeping and accounting services for the landscaping industry. So let's get this started. So the three key items that we're going to go over today is job costing, which I know is on top of a lot of my fellow landscapers list here, and it's very important. Separating service lines. So if you have multiple divisions within your company, how to get started on that, how to track that, and key items to do once you do get started. And then the key accounting ratios, which really help you measure the profitability, liquidity of your company, and so on. Okay, so job costing. What is job costing? So it's tracking the actual cost for a particular job. So the goal of job costing is to see the profitability of each job, right? And with job costing, you'll be able to analyze and see how close your estimated costs are to your actual costs. And it's very important to job cost because you want to see where you are coming in with your estimating process. Are you underbidding? Are you losing money on your jobs? What does that look like? So this is key. When you have a job costing report, it's like a mini financial statement, right? Because it has your price, it has the direct costs, your materials, and your overhead, which all really translate into your financial statements. And if you're job costing correctly, once you look at your end of the year financial statement or your period end financial statement, it'll directly correlate with that, and you'll be able to turn out a healthy profit margin if you're doing these steps beforehand, right? If you have all of these mini financial statements for each project or client, so to speak. Estimating and job costing. So before you can perform a job cost, it is important to first incorporate all necessary aspects to your job estimate. If your estimated process is incomplete or you leave out data, then you won't have an accurate estimate to compare to your job cost report, right? So there are three main areas that is needed for an accurate job cost report. That is your direct materials and equipment. So these items are directly used for that particular job that you're job costing, right? Labor cost, direct labor cost, overhead, all of the other miscellaneous items that, your business expenses. Those are the three key main items that will be needed to track in order to come up with a job cost report. So tracking labor, how do we get started? What do we track and how do we go about tracking, right? So what do we need to track? We need to track the amount of hours that's worked on that specific job, each employee, how much that employee gets paid, so their pay rate for that specific job. And then you have to add labor burden, which includes your workers' comp, your payroll taxes, etc. Those are the items that we need to track for that particular job. And then how do we go about tracking this? So it really depends on the software that you use. But maybe in the CRM that you're using, there's a function where employees can clock in and out of particular jobs. And then you can pull up a report from that software and see how much hours is allocated to a particular job or client, right? Or you can do it the old-fashioned way on an Excel spreadsheet, however you would like, right? Materials and equipment. So how do we go about tracking this? And what do we track, right? So we're tracking any equipment rentals and materials, direct materials that you're using for that specific job. All right. And don't confuse equipment for, equipment like an asset. An asset, any machineries, your trucks, your trailers, your skid steers, anything that you have within your business that you're using for multiple clients for multiple years, that's part of your overhead expense. Equipment here is more like you went and you rented a bobcat for the day for this particular job. That is a direct expense for that specific job. So those are the items that need to be tracked, as well as other miscellaneous materials. So how do we go about tracking this? So there are numerous ways you can go about tracking this. So you can have your employees take pictures of receipts and write down the project that they were working on, and then have them text it to you at the end of the day, or even email it to you, right? And then once you get those receipts, you get that email, then you can allocate it to that specific job, whether you're doing that on an Excel spreadsheet or on an accounting software like QuickBooks, or maybe you're using another software. Another way you can do this is by other, softwares that I know landscapers use, such as Element, Jobber, different things like that. Your employees can have an app on their phone and write in how much materials amount they're using for that particular job, and then you can pull up a report and have it that way. You can give your employees a sheet. You can print out a lot of sheets. They can manually write it every day and hand those reports back into you, and so that way you can see what they spent on this particular job, and you can have it that way. You can keep track on it by using a spreadsheet. So it really depends on what softwares you're utilizing, the capabilities of those softwares, and then what your preferences are. Tracking and allocating overhead. So these are not your direct costs, so don't get those mixed up there, but these are items that are not directly associated with a particular job. So since your estimate incorporates this, it is important to include your job costs after the project. So examples of overhead include your rent expense, administrative costs, utilities, insurance, marketing, repairs and maintenance, and so on. Be sure to include depreciation for any assets. Like I mentioned before, maybe you have a skid steer or a bobcat that you're using, but you use it on many jobs, and you have these assets within your company that you're going to use for X amount of years, right? And so you want to come up with depreciation expense per year, and you want to have this as part of your overhead, so that you're allocating it to every job and you're getting your money back. So with depreciation expense, the best way and the most accurate way to approach this for job costing, easiest too, would be, do you know that you have a truck, and you know that for trucks, you usually just use each truck for 4 years, and you bought the truck for $40,000. Okay, so that means each year you're going to depreciate that truck by $10,000. There you go. You add that as part of your depreciation. How long do you normally use your bobcat for? Is it 2 years and then you get rid of it and then you buy another one? Depreciate it by 2 years. This is not, again, this is just for job costing purposes. This has nothing to do with taxes, right? Taxes, we have to follow the IRS's rules and how long you can depreciate it for and different things like that. But this is more accurate. This is really up to you. Come up with a number that's, applicable to you and your business, and then you can allocate depreciation expense to that as part of your overhead. How do you go about tracking overhead? So, your accounting software that you're using, whether that's QuickBooks Online or Xero, that's keeping track of your overhead items. And then, or maybe you're old fashioned, you're doing it on a spreadsheet. And then how do we allocate overhead to each job? How do we go about doing that? You can use a single overhead recovery method, which is the easiest and an accurate way of allocating overhead costs. So overhead, the formula for that is overhead divided by cost of sales. All right. So here I have my job costing report. So as you can see here, we have labor. And again, this is like a basic job costing report, all of these items really vary on the job, on the service that you're providing. So just keep that in mind. So we have labor first. We have John, Joe, Steve, Carl, and Juan. How many hours did they work on that particular job? And then what's their rate? How much do they get paid? Then you come up with their total cost, right? Now we're going to add labor burden, which is those other items I mentioned before. So payroll tax, workers' comp, things of that nature, which is 22%. That's the industry average. Yours may be a little higher or lower depending. But usually it's at 22%. You can use the number if you would like, in your job cost report to allocate to that line item. So that's 184.80. So I get my total labor cost at $1,024.80, right? Moving on to materials. Here are my materials. My total materials here, $1,100. And then my overhead allocation. And then the overhead allocation came out to 40%, which is the industry average for that amount. It's at $849.92. So the total actual cost of the job is $2,974.72. And this was done on an Excel spreadsheet, as you can see, but you can do this on your accounting software. We use QuickBooks Online for our clients. That's where we create our job costing reports, or any other accounting software that you use, or any other software in general that has that capability. So taking action, now you have your job cost report. What happens after? How do you analyze it? What are the key things that you should be looking at? So developing a job costing report is great, but that alone doesn't help your business, right? It's important to take action based on those results. First, compare your estimate to your job cost report. If your estimating is accurate, the difference between the two should be 0. Next, adjust your estimating process or make changes so your future jobs align with your profitability goals. Job costing also gives your crews measurable goals that they must meet in order to achieve profitability. If they don't know what the goals they should be aiming for or time-wise, then they're never going to be able to hit the mark with those goals, right? So job costing provides valuable direction. So after you compare and you see how you did you lose money? Did you make money? Make those decisions so that it translates with your financial statements, because really these job cost reports are like mini financial statements. So the more profitable you are and the better you are at job costing today, that's directly going to correlate to your profit and loss statement. And who doesn't want a healthy profit margin at the end of the day, right? Also, some of my clients, they have their job costing reports and then they label it. They have maybe 5 to 10 labels. Okay, this was for a retaining wall that was X number of feet. So that way, maybe next time they go to the retaining wall section, okay, how much did it cost me on average to do this for different clients for this length or what have you, and then they have a better way of job costing in the future and they get better at their estimates, really. So it's a great tool to utilize. Moving on to key accounting ratios here. And another thing we go over with our clients on our quarterly meetings are these ratios, because they really help you measure the company's liquidity and debt, different things of that nature. So starting off with the current ratio. So current ratio is your current assets divided by your current liabilities. So current assets include cash, AR, marketable securities. Your current liabilities include anything that is due within less than a year. So something that you have to pay out in less than a year. Your accounts payable, your sales tax payable, your payroll tax payable. Those are all examples of your current liabilities that you may have within your company. And so in this example, we have $280,000 worth of current assets divided by $170,000 in current liabilities. That gives me a ratio of 1.65. So generally anything over 1 is good. If the number is low, then it's best to have very reliable and predictable cash flow, like recurring maintenance or landscape contracts, because this really measures the ability that you have to pay your upcoming expenses and to stay current with those items. So this is a key ratio to look at, the liquidity ratio here. Debt to income ratio. So this ratio indicates how effectively you manage your company's debts. And we all know we all have debt, especially in this industry, because when you're first beginning your company in this industry, there's a lot of investment. You have your trucks, your trailers, your mowers, and sometimes we don't have the cash to pay it, so we finance it. This is a key ratio to look out for. So generally, a debt to income ratio of 36% or lower is considered a good debt to income ratio. Many lenders will finance up to 43%, but if your debt to income ratio is higher than 43%, you may have a hard time to getting approved for a loan. And some of my clients saw this with the SBA loan about, your debt to income ratio is a little too high for us. They didn't. So it's a key ratio to look at tonight. You just have to pull up your profit and loss statement, your balance sheet, and calculate this ratio here. Return on assets. Like I said, we have a lot of assets in a landscape company. And so this is also a key ratio to look at. So this is your net income divided by your total assets. This measures how profitable a company is relative to its assets. So in this example, we have $140,000 in net income divided by $690,000 in total assets. That gives us 20.3%. A good goal to have within a landscaping business is 15 to 25%. Return on equity. So everybody's interested. What is equity? What does equity mean? equity items are, what's included in equity is your investment into the company. So have you contributed cash or property to your company? That increases your equity. Your net income. So if you're profitable for the years, that increases your net equity, your equity. What are things that decrease your equity? If you're taking out cash from your company, that decreases equity. If you have a net loss, other items such as loans and things like that also, either increase or decrease your equity, but it really depends on the entity structure you're under, whether you're an S corp or an LLC, different things like that. But this is something key to look at too, right? Because you're the business owner, you want to have a healthy equity line, especially if you are looking to sell your business in the future. This is what those buyers would be looking at, is the equity section. So how do we measure this? So that is net income divided by equity. In this example, we have 140,000 in net income divided by 380,000 in equity. That gives us a percentage of 36.8%. This percentage should land above 25%. It's a measure of the return earned on the money you and or other investors have put into the business, like I mentioned before. So safe investments typically have a lower return on equity than landscaping businesses. If your return on equity is low, then it may be worth it to look into safer investments, right? So we're looking to be above 25% in this area. So what do you need to measure this? You would just need to have your profit and loss report for 2020. What was your net income on that profit and loss report? And then your balance sheet. What was the total equity? And then you can calculate this figure here. Again, you want to land above 25% on that. Asset turnover. So this is revenue divided by assets. In this example, we have 1.3 million in revenue divided by 690,000 in assets. That gives us a ratio of 1.9. A goal to shoot for is anywhere between 2 to 5 in this area. What does this measure? It measures how effectively you use your assets to generate sales, which is important. Like I mentioned before, we have a lot of assets in the landscape industry here, and we want to make sure that those assets are being used efficiently, right? So a low number like this one, 1.9, may indicate that you've invested more in equipment and facility than you really need, or perhaps that you're simply not using your equipment and facility effectively. Average collection days. So if you have AR, this is a huge ratio to look at. It really indicates how fast you collect your AR. So the formula for this is your average collection days. It's accounts receivable divided by sales divided by days in the period. So in this example, we have 100,000 divided by 1.3 million divided by 365 days, so whole year. That leaves us with 100,000 divided by 3,561. Our average collection days is 28.1. So it's important to keep this number low because we want to collect faster for healthy cash flow within our business, right? So it's important to catch this early, calculate this, catch it. Get customers on a recurring monthly payment schedule. You can provide an incentive to your billing staff. So who's doing your billing? Maybe you have two people doing the billing. Create a competition between the two and see who can collect AR the fastest. Make it fun. Bill before you render services. Use progress billing. Try to get customers to prepay. And suspend services if needed. All right, so these are all actionable steps that you can take to lower your average collection days. That's goal. All right, now we have separating your service lines on your financials. So for this example, we're going to be using maintenance services, install, and arbor services. How do we go about separating that, and why should we separate it? So, have you ever stopped to work out which part of your business is bringing money? Your business may be broken down into different service lines or departments. You need to know where the majority of your business income is coming from, right? Maybe you're losing out money on your arbor services. Maybe you're making more money in your irrigation service line. Whatever the situation may be, this can bring clarity into your business, and maybe you need to cut a service line because you're not working as profitable or efficiently, or maybe you're not as knowledgeable, right? And you could catch this early on by implementing this. The goal here is to create financial statements, so your profit and loss for each different division. But how do we go about that? How can we get started on this tomorrow? So you'll need a method of tracking and separating your labor for each division, and your materials, your direct materials for each division. So we do this a couple of ways with our clients. If we have a bigger company and each employee belongs to a certain division, you can issue a credit card to that employee, and then once you have your transactions coming into QuickBooks Online or whatever software you're using, and then you have your bank pulled up as well, you can see, okay, who is using that card? Okay, it was Juan. Juan belongs to the maintenance division, so you categorize that expense to the maintenance, and so on. That's how you would go about that. Maybe you have a smaller company and some of your employees commingle, so Juan also works for maintenance, but he also does some arbor work. So how do you go about that? You can have, again, different credit cards, but instead of having a different credit card for each employee, you'll have a different credit card for each division. And what I have my clients do is, okay, put a sticker on each credit card, label one maintenance, the other install, the other arbor, and then when you go and purchase materials at the store or wherever you are, and you pull out the right card for the right division. And so again, you're able to pull up your bank statement and see the card that was used, and you're able to separate your expenses into each division by doing that. Or you can do it the old-fashioned way, as always. Keep your receipts and then allocate it that way, right? So how do we allocate direct labor to each division? So this one is a little easier. You can have your general ledger set up with your payroll provider. So what we do with ADP, Gusto, or Paychex, whatever our client has, is we get on the phone with those payroll providers and we say, okay, we need to have different divisions set up for this company. And then these different employees work in this division. Once we get that integrated with QuickBooks Online, which is what we use, or whatever accounting software that you may use that integrates with your payroll provider, you can have that payroll expense, the wages and the payroll taxes, allocated automatically to that division each time you run payroll, because it'll be synced, right? So that's how you can have go about that. If you write physical checks to your employees and you're doing after the fact payroll or anything like that, you're printing out your checks, on the memo line, you can write, okay, arbor for arbor services. Or if you're paying a subcontractor, you can write that on your memo line. You can pull it up on your bank or yeah, you can pull it up on your bank and then allocate that payroll to that specific department, right? Or this is a good method if you're also, like I said, commingling employees. You can write on the memo line, okay, they worked 50% on Arbor division, 50% maintenance, and so on. So there's different ways you can go about this as well. So on QuickBooks Online, there's a way to separate your different divisions, but this can be done in any accounting software. The same methodology, probably just different sections and different names. But we use QuickBooks Online. So you would hit that gear icon when you're on your dashboard page here, and you would go to Accounting Settings. So here your Accounting Settings page. Go to the Advanced tab on your left-hand side, and you'll go down to Categories. You'll flip the switch for Tracking Classes, that's what it's called. And you'll want to check off the Warn Me when a transaction isn't assigned to a class. That way you never forget to not assign a transaction to a particular class. It'll warn you actually. And then you're going to hit save. Awesome. So here's a screen on QuickBooks Online. So this is an invoice. So if you're invoicing through QuickBooks Online, this is how it looks like. And if you have your classes turned on, this is what the layout is. So you have your product and service over here to your right, description, and all the way to the left where it says class, you get to choose the class. So, Arbor, remodel, whatever the class may be for this particular invoice. Now, I know this is an invoice, but this is the way that it looks like even for an expense. You have a particular class that you can associate an expense with. You can even split the expense. So for example, if you have a $500 expense, but you used it in two different divisions, you can put 200 towards one, 300 towards the other. So it's very fast to do on QuickBooks Online. Finally, you get your beautiful profit and loss report for each division. So this is more of an example, but if you follow the steps that I had mentioned before in order to allocate those direct costs and the direct labor, you would see that under your class types here. And then you'll notice all the way to the right a not specified section on QuickBooks Online. What does that mean? So the not specified section is items that you had not specifically allocated to a certain department, because maybe it's an administrative staff, maybe it's marketing. And so those expenses are not specific to a certain department, right? So how do we allocate the amounts on that not specified column to all of the divisions that you have? So you can allocate, because those are really your overhead items. You can allocate your overhead based on the revenue of each service line. This is how we do it. So, so you have your revenue for that specific department over your total revenue for all departments, and then you're going to get a percentage. You're gonna take that percentage and you're gonna multiply it by all of your overhead items. So that's your rent, your marketing and advertising and so on. Everything in that not specified column. And you're gonna get an amount to allocate to each division, right? And how do you go about doing this on QuickBooks Online? So You go to Accountant Tools, you go to make a journal entry. And you'll make a journal entry at the end of every month or every 2 weeks or every week, how often you would like. And you'll create an expense account. It's called overhead allocation. Now, this account, it's a zero balance account. So once you make your journal entry, there should be no balance in this account. It's just expense in, expense out. So here we have an example of that. So let's see here. So we have overhead allocation here for the Arbor division of $845.35. So that will go in your debit column, the allocation that you came up with, the percentage times those non-specified items, right? Here's your other one for your maintenance, the other one for your install. And then same account, overhead allocation, it should be the aggregate of these items. So this is a zero balance entry, so you won't mess up your financial statements with this, okay? You're just allocating overhead to each division. And then you will hit save and close. Once you go back to that profit and loss by class in QuickBooks Online, you'll be able to see your overhead allocated to each department, and nothing will be in that not specified column. Then you can see what your profit and loss would be for each department. And that really helps you gain financial clarity. Like I said, you want to catch that early on, should you spend less advertising dollars on install because you're not doing it as profitable as everybody else, or you're losing money. You want to catch these things early on. Or even if you're in business for a couple of years, you still want to know these items because you want to be able to give people bonuses and things like that, knowing the profitability of the division those employees are working in, right? All right, so we're at the end of the presentation, but I'm going to take a few minutes to answer some questions. But yeah, if you would like to contact us to perform any of the services, and things we went over today, or even if you have questions about anything, I'll be happy to hop on the phone with you, or contact us through our Facebook group called Landscaping Accountant on Facebook, or email. All right, so again, thank you for your time. I'll be answering some questions now. All right, so someone asked, Carla, will you be emailing everybody this recording after? Yes, I will be emailing the recording out. Someone says, this is great. Are you taking on new bookkeeping clients? Yes, we are. We're taking on clients. Someone said, do you recommend QuickBooks Online over other versions? I hear mixed reviews on the online version. So I hear that too, Connor. But the thing is that a lot of people, what they think is they search, is QuickBooks Online good for job costing, right? And then you get some, yes, it's great for job costing, and then you get some that say no, it's not good for job costing. And so manufacturing companies use job costing a lot, and QuickBooks Online doesn't work for them because there's a lot of moving parts with manufacturing companies, and that's where you're getting a lot of your no responses from. But in this industry, it's very easy to use QuickBooks Online for job costing. You know, it really depends on the softwares that you're using, your technology stack. So I have different clients. They use LMN and they use QuickBooks Online for their software, right? So what I do, what we do here, we pull up their LMN reports for time tracking because their employees could clock in and out there, and for materials tracking. And then we make those manual entries onto QuickBooks Online because QuickBooks Online integrates with LMN in terms of invoices. We have their invoices and their projects, and we manually allocate those direct labor items and those direct material items. And then for overhead, obviously, we use QuickBooks Online. So it just you just need to know which softwares you're using and how to make those all come together so that you can create an accurate job cost report. So in short, I think, yes, QuickBooks Online is definitely a good choice to, go with to create a job cost report. Someone said, we use Jobber but want a new software. Do any of them track classes for when we push invoices to QuickBooks Online? Okay, so I haven't found a software yet that will push over every single line item that is needed for job costing. It's just not out there right now. So in terms of invoicing, direct materials, and direct labor, something that's going to completely integrate with QuickBooks Online, no. But parts of it, yes. Like I said, for example, Jobber will integrate the invoices on QuickBooks Online. So there we have the project, we have the invoice, we have the client. But then we'll pull up Jobber to see the time tracking, and then for the direct materials. So we'll pull that up every week or every month or however often our client wants it. And then we look at those amounts and then we manually input it into QuickBooks Online. Again, it matters what your technology stack is. We have some clients using QuickBooks Online to invoice, and then they're using Gusto for their payroll provider. So Gusto syncs with QuickBooks Online, and then their employees can track their time against a specific job on Gusto. Gusto syncs with QuickBooks Online, so now the labor gets automatically synced into your QuickBooks Online onto that specific client. So that's nice. But then how do we track materials? So we have them send us receipts. Different ways of doing things, right? But as far as having a full integration when nothing needs to be done manual, haven't heard of that yet. Someone says, do you recommend paper sign-in sheets? Again, that's another method of keeping track of your costs, of your time tracking, of your direct labor. So some of our clients use a sheet. They issue it every day to their employees, and it'll say, okay, what's the project name? How much money did you spend on this project? How much time? And then you collect that paper from your employees every day. You keep them accountable. You have that paper, and then you input that into an Excel spreadsheet or into your accounting software. That's just a more manual way of doing it, but you can do that as well. So someone said, I'm a solo lawn care company. If I need help just for a day or two, will it be better off to have them fill out a 1099 independent contractor or to have them as an employee? So if you're going to make $600 or less, no need to have them fill out a 1099 form. no need for them to be an employee. But if they are going to make over that certain amount, then yes, put them as an employee. But if you're going to use them for just a couple of days out of the year, then just issue a 1099. It's really not worth, having them as an employee if it's just for 1 or 2 days. Someone said, we use Yardbook. Do you recommend using Wave alongside Yardbook? Yardbook is great for tracking materials and for tracking time. And if you're using Wave for your accounting software and invoicing, you can use those two as well. Yep. Awesome. All right, guys. Well, that is all the time I have today for any questions. But like I said, feel free to give me a call at 838-384-0463. I can answer any questions that you may have in regard to accounting, taxes, job costing, anything like that. I'll be happy to speak with you, or you can email me. But yeah, thank you everyone for joining. I hope you got some good, valuable information here today, and feel free to join our Facebook group, Landscaping Accountant. Have a nice rest of your night.